Greetings, my name is Jerry Mbarani and I want to take you through simple steps of preparing the balance sheet or the statement of financial position. On your screen, you have a question on balance sheet. The question reads, the following information relates to Capsoya traders for the year 2021. We have buildings, we have motor vehicle, we have cash in hand, we have bank, we have debtors, we have 2-year bank loan, we have creditors, we have capital, and we have accounts payable. You are asked to prepare a simple statement of financial position for the year ended 31st December 2021. The question carries 5 marks, and this is how you go through it. I'll take you very simple, and please observe how we do it carefully. So the first step you do, you draw a T account. The balance sheet also is a book of original entry, and we use it to record information firsthand. So we have the balance sheet. The first thing you do, you write the name of the business, which is Capsoya Traders. So Capsoya Traders, Capsoya Traders. And the statement that you are preparing is called the statement of financial position, and for the year 2021. This is how you do it. We use a simple we always use a simple basic accounting equation, whereby you are told the basic accounting equation is assets is equals to capital plus liabilities, whereby you take the sum of all assets, whereby assets is divided into two. You have the fixed assets or non-current asset. This one is added to the current assets, and capital remains as capital. In other words, is known as equity. And liabilities is also divided into two. We have long-term liabilities, and we have the short-term liabilities. Using this accounting equation, we are going to prepare what we call the statement of financial position for the year 2021, and it relates to Capsoya Traders. So, using our information, we are told the information that we have is we are given buildings, and the amount is written below there, or aside of it. On your farthest right, you can see the amounts that are written there. We start with the fixed assets. The first thing you do, you categorize the assets and the liabilities either as fixed asset, current asset, long-term liabilities, or short-term liabilities, or what we call the current liabilities. The short-term liabilities are also known as the current liabilities. So we go straight into categorizing our items, and this is how you do it. The best way of handling this question, you first categorize your items into either fixed assets or current assets, or what we call the liabilities, the current liabilities, the short-term liabilities, or the long-term liabilities. So I will use a different pen to show you how to go about it. So the first step you do, you start with the buildings. So buildings is categorized as fixed asset or non-current asset. Motor vehicle falls under fixed asset. Cash in hand is what we call a current asset. Bank is also a current asset. Debtors falls under current assets. A 2-year loan falls under long-term liabilities. Creditors is a current liability. Capital is capital. And accounts payable falls under what we call the current liabilities. From the notes that I provided earlier, you will understand that these examples that I've written down, you'll use them to help you to categorize your items. So the information that you will be provided, to use it to prepare what we call the balance sheet. And straight to the point, I go back to our format. This is the format of a statement of financial position, and we shall use it to prepare the statement of financial position. So from our question, we start with the first item. We have buildings. We have buildings. We write down the buildings. So buildings falls under fixed assets. So the first thing you come and say fixed assets, put it there, and you have Kenya shillings and Kenya shillings. You have two columns for Kenya shillings. So the first item, you always start with the most fixed asset. So buildings are there to stay for longer. So buildings, the amount is 800,000. And then followed by what we call the motor vehicle. The motor vehicle is 750,000. Get the total of the fixed assets. We don't have any other fixed asset from our list. We don't have any other fixed asset. So we tick the assets that we have already labeled down. So we get the total of the fixed asset. We get the total of the fixed asset being, put a line there. So we add, we get the total being, this is 0, 0, 0. You have 0, then you have 5, and then 8 plus 7 gives you 15. So we have 1,550,000 as the total fixed assets. This one is added to what we call the current assets. And the current assets that we have the first current asset being cash in hand. So we write cash in hand. The cash in hand can also be written as cash. So cash in hand is 80,000. Write it in the middle column. Then we have bank. So bank is 30,000. So add 30,000. We have debtors being 5,000. So come and add debtors being 5,000. Add the total of the current assets. You get the total of current assets being 115, because 8 plus 3 gives you 11. So you have 115,000. So that is the total of what we call the current assets. We go to the other side. Using our basic accounting equation, we have said assets is equals to capital plus liabilities. So the first item that comes into this side, or the credit side, this is a credit side, this is the debit side of the balance sheet or the statement of financial position. So just like in the other side, you have two columns for Kenya shillings, the first column coming there and the last column coming there. So we start with the first item, which is capital. So capital, have it on the furthest column or the last column, and our capital is 1,405,000. So write 1,405,000. This one is added to what we call the long-term liabilities. This one is added to what we call the long-term liabilities. So capital, you add what we call the long-term liabilities, and we have only one long-term liability, which is the 2-year loan, the 2-year bank loan. So have 2-year bank loan. have 2-year bank loan of 200,000. So record your 200,000 on the farthest right because we don't have any other long-term liability. This one is added to what we call the current liabilities. We have current liabilities. The first current liability is creditors. We have creditors. So creditors, start with creditors. And creditors is 18,000. Have it here, sorry, 18,000. Have it on the middle column. That one is added to what we call accounts payables. So accounts payables. Accounts payables being 42,000. So when you add these two, you get the total of 60,000. Get a total of 60,000. So ignore this one. It's not there. So get a total of 60,000. That is the total of current liabilities. So we are supposed to get the total of both sides, see whether our accounting or the basic accounting equation, is equals to assets is equals to capital plus liabilities. We want to prove that this basic accounting equation is transformed into the statement of financial position. Let's see whether the debit side balances with the credit side, of which the debit side is the total of assets and the credit side is capital plus liabilities. So you can have your calculator, get the total. So we have 1,550,000 plus 115,000 to get a total of 1,665,000. That is the assets. And let's see on the other side, let's get the total of the other side. So it should have a double line. So it's 1,405,000. That is added to 200,000. That is added to 60,000. You get a total of 1,665,000. And from that information, we are now satisfied that the basic accounting equation of assets is equals to capital plus liability. We have proven that using this equation, we can prepare a statement of financial position. Even if you are not given the capital, you can determine the capital as long as you are given the assets and as long as you have the current liabilities. We shall look at it into more details when we proceed to the final accounts, or what we call the statements of financial position. Thank you, and let's meet in our next lesson.